Hi, this is Zak Mir with the Bulletin Board Heroes on Friday, the 17th of January. Starting off a somewhat esoteric collection today with Clontarf Energy. Here we just see the shares bouncing off the floor of this rising trend channel from September. Probably confirmation of a new leg to the upside would be an end-of-day close either today or Monday above the rising 50-day moving average at 0.83 pence, and that could point the stock onto a target towards 1.5 pence, effectively testing that part of that late November peak. Stop loss at this stage back below 0.65 is the obvious place. On to Eve Sleep, which has not exactly been an easy situation with the bulls over the recent past. What's interesting here is that it looks as though we're just sort of bumping along the bottom here, possible falling wedge with the 50-day moving average and the October support area very much in focus. What we want to see here probably is a break of that 50-day line at 2.25. If we can get to that, then there's a chance of the shares filling that gap to the downside between 4 and 5 pence. In fact, you could argue that shares have already broken a trend line from the end of December through the 1.5 pence area and are hence on their way. That's also accompanied by bullish divergence here as well in the RSI window, so it's definitely something to watch out for over the next few days. Next contender is Immotion Group, and here you can see that we've got the shares breaking the rising 200-day moving average at 7.3 pence, so that suggests they're on their way. Another buy signal, which I particularly favour, is the way when you have the 50-day line actually crossing below a rising 200-day line, and that actually becomes the buy point. And you can see that actually was a good entry area in late December. But forgetting such issues, you can see that stock now possibly heading towards the top of a rising trend channel from August towards the 10 pence area, and that very much valid while we hold above the 200-day line in the meantime, and that obviously would retest the old June resistance area as well. On to Keras, which I haven't covered for quite a while, but it seems to be back-end business with a classic wedge break there. I suppose the wedge break around the 0.16 level we're sort of set to close well above that, and that would open up the possibility of filling that November gap between roughly 0.27 and 0.3 pence, just above the 50-day moving average as well. Stop loss back below 0.15 should cover that situation. Was going to avoid Lekoil totally, because I think most people would have wished they had avoided the stock over the last month or so, but just something to note here, just on a simple basis, that last low in June, 2.76 for the shares, and basically it looks so far that we've just bear trapped that level. So while above 2.76 now, there is a chance of at least a retest of the post-crash peak at 3.89 pence to be hit. But just reminiscent a bit of the way that Bitstack also overshot and went below the 10 pence level, and then that at least temporarily became new support. On to Omega Dynamics, which is certainly a stock I have never covered here before, but it looks as though this rising trend channel here is just too good to resist. That's been in place since August, bounced off that at 15 pence today and over recent days, and really while we're above 15 pence, looking for a top of channel move towards 25 pence. Looks like a very strong chart with a golden cross between the 50-day and 200-day moving averages last month, and also the way that over much of the last month until today's breakout, we've actually had sideways consolidation, a so-called step formation, which is normally something you only see in the strongest of situations. Pathfinder Minerals was one of the favourites here for 2020, and then promptly fell below a penny at the beginning of January, but it has broken out of this wedge earlier in the week, and Hi, this is Zak Mir with the Bulletin Board Heroes on Friday, the 17th of January. Starting off with Clontarf Energy, which has broken through a rising 50-day moving average, which similar move that it did in November. So one would assume further decent upside here, possibly up towards the top of a rising trend channel from October at 1.5 pence, and the target value while we hold above today's intraday low at 0.68 pence. Over the next day or two. Moving along to the next contender, which has been a rather difficult one would suggest, Eve Sleep, coming through just now. Here we see how the shares have broken this line of resistance from the beginning of the month in a sort of descending price channel as you'd expect, but we've broken that January line at 1.6 pence, while we're above that looking for at least the 50-day moving average at 2.23 pence, and obviously above that, the main resistance is the October peak at 3.5 pence. The break today accompanied by bullish divergence in the RSI window and also a bear trap rebound from below 1.7 pence, probably 1.7 pence on an end of day close is actually as good a stop loss as any, even though probably to be safe 1.6 would be the right money management point on that particular situation. Next up, Immotion Group, which is looking very encouraging indeed. We had the previous buy signal, which was a cross of the 50-day moving average below a rising 200-day line, so that was around the 6.2 pence level at the end of December. But more conventionally, we've got the shares now likely to be running into a golden cross, with the 50-day moving average now flat and set to rise. Top of the trend channel here is 10 pence, and the upside of 10 pence valid while we hold above the 200-day line on an end-of-day close basis. If you want to risk below the 50-day line at 6.92, that would be an option as well. As on to a stock which I cover now and again, but looks like for Karis, this is the time certainly to take a look at it from a technical perspective. Broken this extended falling wedge at 0.16 pence today, which is very encouraging and does suggest that the shares should at least hit the 50-day moving average at 0.25 pence as well over the next week or two. We've got that gap up to 0.3, which is at this stage the best case scenario as far as the upside or potential upside for the shares are concerned. A stock that I wish I had probably avoided, and probably many other people have avoided over the last few weeks, is Lekoil, even if you managed to get onto that vertical move there from 5 pence to 11 pence before the shenanigans began on a fundamental basis at the group. But something to look at for now is the way that we just saw during the week, Wednesday, Thursday, we saw the shares just bear trap below the previous June 2.76 support. That's now become support again, and while we're above that, there's a chance at least of a retest of the 4 pence area, which was the old October support, and also 3.89 pence, which was the post-crash, let's say, resistance for the shares. So definitely one to keep an eye on while it's above 2.76 pence, as that looks like that's coming in as new support for the stock. Less problems for Omega Dynamics, which has broken out within this rising trend channel from August. Recent sideways price action consolidation, very strong consolidation around the 15 pence level, but good bounce today, and looks as though the shares could hit the top of that August trend channel at 25 pence over the next few weeks. That target valid at least while we're above the 14 pence area, and you could probably risk down to the 50-day moving average at 12.42 pence as a dynamic stop loss for this particular setup. Stock which looked like it was going to be one of the stocks of the year at the turn of the year, but just gave us one final probe below the 1 pence level. We've had plenty of false dawns for Pathfinder Minerals all the way down, so that was a failed rally there in September. Another bull trap there in the end of that month as well. So we're used to that type of spiky action, and that was a bull trap there at the end of last month. But looks like a falling wedge break here this week, and we've had two gaps to the upside for the share. So while one wouldn't want to tempt fate, this looks like it could be it as far as a lasting rally is concerned. If you're cautious on the stock, maybe wait for the 50-day moving average to be broken at 1.09, but obviously that is giving away a lot of the upside. So at this stage, really the best that can be said is that while we're above the 0.9 pence area, we are looking for at least a retest of the 1.2 pence area, which was the last December peak. Ideally, the shares would head off towards the main resistance post-September, 1.5 pence plus, while they remain above 0.9 pence. See how that goes over the next few days. Finishing off with another very difficult situation, Versarien. That's had plenty of false dawn or brief rallies over the recent past. There was one in July, one in October, where you get 10 to 20% upside, but then on to new lows. Another falling wedge break here today and breaking the wedge at 79 pence. Let's see whether the shares can get up to the 90 pence level at the 50-day line, or perhaps into the retesting last month's £1 peak. However, briefly, stop loss on this situation back below 75 pence, which is today's low. It should do the trick. That's it for me today. More updates on Monday.